Good morning and welcome to the Northern Minerals Limited Investor Webinar. I'm Jane Morgan, the Investor and Media Relations Manager. Today we are joined by our Executive Chairman, Nick Curtis, who will run through the recently lodged presentation, followed by a Q&A session. So to ask a question throughout today's webinar, please use the Q&A function, which can be found at the bottom of your screen. Nick, I'll hand over to you.
Thanks, Jane, and thank you for organising this webinar. And thank you to the shareholders who have joined us and people interested in the company. It's good to broaden the contact base, and we encourage feedback and engagement with our shareholder group. So very happy to be part of this today. I'm going to tell you about Northern Minerals' very particular place and special place in the rare earths industry. Before I do that, my background is very much in the rare earths industry. Back in basically a long time ago, 2001, I took effective control of a company called Lynas Gold, and we bought from Rio Tinto what is now the Mount Weld deposit, and went 14 years in developing that. That gave me a very solid grounding in the rare earths market. And I was pleased to be asked to come back in 22 to chair Northern Minerals and see if we could potentially drive that into production. I've happily accepted the role because I believe that Northern Minerals' particular suite of rare earths are absolutely critical to the electrification process and decarbonisation process that's going on in the world today. And we at Northern Mineral believe we can have a very substantial impact on the global decarbonisation needs, and I'll explain the use of the material a bit later on, as well as a very strong local impact to the community around where we will be building this mine, which is up in the Kimberley in Western Australia on the Northern Territory border between Western Australia and Northern Territory, near the Tanami Desert. It is a very remote and not well established or wealthy part of Australia. And we're very proud and happy to be able to go up there and support the community, be involved with something which will be active support for the community. So those two aspects are important to us. But let me tell you a little bit about what I did when I came into the company, first of all. The company had done very well since its inception in 2006, where it was a uranium explorer in discovering a very significant mineralised system in the north of Western Australia that contained this very unusual mineral called xenotime. Xenotime is not known to occur at mineable proportions in any other hard rock mining asset in the world. It is quite a unique geological structure. That, for about 10 years, further exploration was done across the vast area they'd pegged, which we still have a substantial portion of. I think it's about 1,800 square kilometres that we have as exploration ground. And the geology is all quite similar, and the geology is all highly prospective for further occurrences of xenotime. The company had progressed toward a development operation in 2015 with a feasibility study, and then chose to build a pilot plant up on site, which operated for 3 years. The pilot plant had come to the end of its useful life, and there was now a need to take the company to the next level and build an actual mine. I came in for that purpose, and we are now focused on taking one and one only of the many geological occurrences that show mineralisation on the site into production. That is a fault system where the fluids from the earth have come through into the crack and have deposited it in a way that makes a mineable resource. We call it Wolverine. And our focus now is on the development of the Wolverine mine, which will be a producer of metals whose names are difficult to remember, dysprosium and terbium. And it will be the highest grade producer and one of the major producers in the world of dysprosium and terbium. I'll come back to why that's an important opportunity. So we focused the attention on this development, and at the same time, we focused on what we could do realistically as a company. The pilot plant had a semi-chemical plant built up in the desert behind it. First thing we do is we go underground, open pit and underground, we crush and break the rock and concentrate it. The previous management had built a very useful, informative carbonate plant to take the material and process it in such a way that it became a useful feedstock for a refinery of rare earths. We decided that we would not do that business. We decided that given the focus that we have and the skills that we have at Northern Minerals and the capital that we needed to develop it, we would remain a mining company. We would not take the next step that Linus took in my day there of saying, no, we've got a nice concentrate. We need to build our own refinery and chemical. And the reason we were able to do that is because we engaged with Iluka, a $4 billion corporation that has been given a very significant loan by the Australian government to develop a rare earth refinery at Eneabba in Western Australia. We engaged with them, and I'm very, very pleased with the transaction that we've done with Iluka, where we are able to sell them our concentrate to be about 20% of the feedstock that they will process through their Eneabba refinery. And that gave us a market for our mine product on the way through. The benefit that I carried when I joined was the work that had been done by previous management. This is a well-established, well-understood, almost shovel-ready mining operation that needs to be managed into financing and production. And now we have a market for all of our product and as much as we can produce. So it is now up to us to execute, and we are in the middle of doing a definitive feasibility study to get that execution right. So look, our goal is to become not just an important, but a globally, if not possibly the most globally significant, particularly non-China, which produces almost 100% of these minerals, supplier of heavy rare earths, not just any heavy rare earths, but these two that I've mentioned called dysprosium, Dy and Tb, dysprosium and terbium, which have a very particular role in the magnet business. The highlights I talked you through, and the management, I have been also pleased that we have been able to reinforce the management structure and the board of the company. Shane Hartwick has joined us as an Executive Director of Finance. I know Shane well, and we are in very safe hands there. We've got a good team now to get through this next phase of growth of the company. I mentioned to you that the company was from 2006 listing, 2023, essentially pilot plant. You can see there 2018, the pilot plant, 3 years of production. I came in 2022 with a view to taking this to the next level. And the company is now focused on updating our DFS on the path to production of the concentrate only to be processed at Iluka's Eneabba plant. Simple statement, complex piece of work to do in terms of a mine, but well within the skill set of us and the Australian market. The asset is DyTb rich. It's about 60,000 tonnes of total rare earth oxide. Now, not all of those rare earth oxides are the payable elements for us, the things we're after, dysprosium and terbium. About 10% of those are dysprosium and terbium. That is the bit that we get paid for really properly. They are the highest value rare earths in the rare earth periodic spectrum of metals, 17 metals. For example, the dysprosium price has been hovering around about $1,500 mark. The terbium price around $1,500. The dysprosium price around about $400, $350 to $400. That compares to neodymium, which is the next most valuable, which is the core magnet metal, which is about $150. So they are the most valuable metals within the rare earth spectrum. We have, as I said, existing near mine infrastructure. There's things like airstrips, small and camps, smaller than what we need for full-scale production. But we have a toehold on production already up in the Kimberley, which is extremely valuable in giving us leverage to take the next step with much less complexity. We have a very strong relationship with the Jaru people, and the Jaru prescribed body corporate. They are determined native title, are the traditional owners of the land in which we are developing our mine, and we have an agreement with them and a solid relationship of engagement, and they are very, as a group generally, very supportive of our engagement. The mine itself is where our major attention is, because if there is going to be some work to do and understanding to have. It's how we mine when we finally get underground or finally get to the open pit and underground. We understand the process because if you could see on this, there is a pilot plant open cut at the top, and that pilot plant open cut is one which has been mined and put through the trial plant. We have produced over 1,000 tonnes of concentrate through that, from that open cut there. This is the same ore body down below, so we have this extraordinary advantage for a junior company that we have really run an industrial operation at small scale for 3 years using that material. We are going to continue on the extension down dip of this particular ore body itself. As I said, there are other geological structures within the area, but this is the one we're going to commence mining on. It is a steeply dipping, it's near vertical, about 25 metres wide by about 300 metre long fluid trap that has actually captured the mineralisation that we're after. And it has some very good grades, but it's a little bit fluctuating in grade because it has what in gold terms is known as a nugget effect. We get some enrichment in some levels and a little bit less in others. So there's some fluctuations in grade as we go up and down. We've drilled substantially. Overall, on the whole area, we have about 135,000 metres of drilling done. And on this part of the ore body, a significant piece. Down to about 350 metres underground, we're at about 25 by 25 metres, which makes it indicated resource, which will be translated into a probable mine resource, which is a very bankable resource. Below that, we have a slightly wider spectrum of drilling because it's expensive to drill down there. And that's on 50 by 50, but we recently got a grant from the government for $6 million, the bulk of which will be spent on drilling deeper to prove up that ore body. There is no risk to the fact of mineralisation there. It's just to be certain about the mine dynamics. We need to close down the gaps between the drill holes, and we're very pleased we got that funding from the government to help us all have a certainty on the mine going forward. And we will match that funding and drill underground to get that to full bankability certainty. Right? Not bankability status, because we believe we are bankable now, but it will be reinforcing to do that. It's also an interesting thing that the government has given us a grant. We have a very reasonable profile in Canberra as a important project. We are going through the discussions around the status of the project, but we believe that there is a good awareness within the Minister's office and those concerned with critical minerals in Canberra that this particular deposit is quite unique and a really important part of the ability to free up the magnet supply chain from China's dominance, which it has at the moment. China, by the way, is about 96% of the world rare earth magnets, and we're looking to develop a separate magnet stage through train through Iluka, and we're a critical element of that. So that grant does indicate that there's some support there, but that's a bit off the track of this mine. The mine itself will be about 42,000 tonnes of contained rare earths. The new drilling program will shore up another 25,000 tonnes into 25 by 25 metre centres, but it actually is about 42,000 tonnes of rare earths oxides. As I said to you before, of that rare earths oxides, about 10% is a dysprosium terbium that we are after, and that will pay the profitability of this mine. The work done by previous management I've mentioned, but we do have a DFS of 2015, which we're redoing substantially, but not so substantially that we're not getting good leverage out of what has been done before. Mostly we're changing the mine planning, we're changing some of the layouts, we're doing some things which need to be done, and we're recosting and redefining which engineering groups are going to do the work. We are well on the track for that. We hope to have the definitive feasibility study completed in about November to early December. And from that, we hope that we can get finance done to develop this mine. And I'll give you the capital cost in a minute as we estimate it, by paper says targeting Q1 2024, but I have been around financiers long enough to know that things can drag out longer than you think, for due diligence, legal documentation, and everything else. So I would say first half 24. We want to be in production in 2026, the beginning of 2026, because that is when Iluka's plant will be open at Eneabba. And we will literally take the material under our long-term supply contract with Iluka and drop it in the gate at Iluka's plant from 2026. So that's our target for delivery. This is a schematic of the mine. It is an underground, open pit and then underground mine. We will be developing the underground mine from the beginning. The box cut, as they call it, that takes you into the decline underground, will be established right from the beginning of the open pit. But the open pit will continue for about 3 years to feed us, to feed the mill, and then it'll transfer into the underground mine. The underground mine is open at depth. It will continue. When we get down that far away in 10 years' time or 11 years' time, I think it's a reasonable assumption that mine life will be extended because we know there is further ore down below that. It's just not worth our while at this point in time proving it up. But there is extensive understanding of that ore body, and we'll be doing a particular type of mining undergrounds called sublevel retreat, which basically comes in underneath, undercuts, puts a cave in place, the rock breaks down and we bog it out and take it up to surface and put it through the mill. A process plant is very, very well understood because it is similar in just about every respect to the process that we trialed to produce 1,000 tonnes of concentrate. So it's basically a magnetic, there's an ore sorter to try and filter out the material that's not valuable to go into the plant. There is then a magnetic separation to upgrade it from about 1% going into the plant to about 4% rare earth concentrate, 4 to 5%, and then we put it into a standard flotation circuit, obviously having reduced the volume because we've upgraded the material, and that standard flotation circuit then takes it up to about a 25% contained rare earth oxides, so 250 kilos per tonne that we bag of rare earth oxides. We put those bags on the back of a truck. They drive about 2,500 kilometres down the Great Northern Highway and down the coastal highway to Eneabba, where we put them in the yard and we get paid by Iluka for that concentrate. We have a significant amount of non-process infrastructure already in place. I mentioned the airfield, gravel pits, that's where the storage facility will be. This is leveraging a semi-developed site, a well-developed site actually already, and that does make it a lot easier for us than just what we did at Linus, which was just, for example, a grassroots site we had to start from the very beginning. We understand, for example, water bores, we understand the water disposition. So these are all very useful precedents from the past history of the company. Obviously, we need to get this thing funded, and the total capital cost will run at about $500 million, subject to final DFS study, but we anticipate about $500 million. We have had an active engagement with government funding agencies, partly because this is actually of national interest in terms of our material will go into the Eneabba plant. The Eneabba plant will produce the whole suite of rare earths, including our material. From that plant, Australia should be able to produce the alloy of metals exactly right to produce magnets there independently of China. I need to tell you that the reason why this is also strategic is that China produces now almost China and Myanmar, in fact, produce about 100% of the dysprosium and terbium that goes into, let's say 98, 99% of the dysprosium and terbium that go into magnets worldwide. 96% of world magnets are made in China. So nothing wrong with that supply chain at the moment. It's flowing freely, but there is a problem with Myanmar as a source of material for long term, and there is a view amongst the consumers of these magnets, auto companies, wind turbine producers and others, that if there were a stable non-China supply, they would be supportive of that supply chain. That's the supply chain we want to develop and do. So the government, I think, understands this. The agencies that we're talking to are the Northern Australia Infrastructure Fund, which does funding in Northern Australia only for developments that have certain criteria which are listed there. They involve the enhancement of infrastructure, they're a public benefit, they're a significant benefit for Northern Australia, and they have an Indigenous engagement strategy. We meet all those hurdles. We recently, are very pleased to say, we submitted a paper to strategic assessment paper to the NAIF board, which is part of their process, and they cleared that to go into due diligence. They are now going into due diligence to be a debt provider to this company. With them, we are discussing the financing with Export Finance Australia, who are the group through which the government does financing not just for trade export, but also for what they call the National Interest Account. That is how Iluka got their $1.25 billion loan. And that same team that did that work for Iluka are very familiar with the rare earth space and what we're trying to do, and we're deeply engaged with them. We're hoping that that becomes the anchor for our debt facility. We will supplement, obviously, that debt with equity finance, and the equity finance is underpinned by the agreement that we have with Iluka, where they've agreed to take up to $53 million worth of equity at FID. So they're not just a supply partner contract, they are a partner to us in this project. They want us to succeed, and they have worked very hard on this agreement to help us succeed in terms of bankability, and we're very pleased with the partnership with Iluka. We have all the necessary regulatory approvals in place to go ahead. We have the environmental approvals, we have the, as I mentioned earlier, community approvals, native title agreements, and so on. There are other approvals that are standard ordinary business practice we need when we commence construction, but there is nothing there that is a primary approval that needs, it's, as I said, almost shovel ready, this project. Give us the finished feasibility study, get the money, we start building. The market opportunity is astounding. I'm going to give you a very quick narrative of why. That is that these magnets have been known about for a long time. Rare earth permanent magnets have been known to be the most powerful magnets in the world. Neodymium, praseodymium, NdPr, that which Lynas produces, that which is produced in China, that which Iluka will produce from their monazite assets, are just by nature the most magnetizable elements on the planet. And they form the basis of high energy magnetic capacity. That high energy magnetic capacity is increasingly important in high-end applications for decarbonisation. Things like large-scale wind turbines, offshore wind turbines that take 6 megawatt of capacity. They're lined with bricks of permanent rare earth magnets to get the strength they need, to get the current they need out of the rotation of that, particularly as they're increasingly what's called direct drive, i.e. there's no gearbox. So that's a huge use and very rapidly growing. Electric vehicles, I don't need to say too much about the electric vehicle push. Everybody knows, particularly through the lithium market, that the EV market is a very, very fast growing market. Electric vehicles and electric motors are best deploying the neodymium iron boron permanent magnets. There are other solutions, but they are inefficient relative to these magnets. The problem statement with using these magnets is that they lose their magnetic quality at a temperature range which is above about 70 degrees centigrade. And that temperature range does happen in these high-end applications. It didn't matter when permanent magnets were being used for lesser applications, but the growth now is in this high-end industrial use. The secret to stopping that happening is to deploy about 5% of our minerals, terbium and dysprosium, into the magnet. We then change by chemistry, change the point at which those magnets lose their magnetic quality to about 350 degrees C and open up entirely the global high-end market for these permanent magnets, which otherwise couldn't be put into the applications because they'd have a risk of demagnetizing. So we're the critical secret sauce to make these magnets work. And That's why this is a particularly interesting deposit. We're the largest known dysprosium terbium deposit, single deposit in the world. We are the highest grade terbium and dysprosium deposit in the world. We have a market for our concentrate. That market will refine it into the oxide of rare earths. Iluka will refine our material, the oxides of rare earths, so they can combine it with their own material and make uniquely outside of China the product that is required for these high-end magnets. And the high-end magnets is growing at more than 9% compound per annum. We're very excited about the future of the market, and we think that we can actually change the dynamics of that market to grow it substantially on the way through. But our material is required in volume, in sufficient volume to make a meaningful difference. That's our goal. That's our aim. And that's what we're looking to do with Iluka. Iluka, as I said, are a partner. They put 15 million convertible note into the project early after we signed the supply agreement and took 5 million of equity. There is a commitment for them to take up to 19.9% of the company, depending on the price. It could be up to $53 million. We are very happy with that partnership. We are working cooperatively and together with Iluka to the shared vision of creating that independent, high-quality magnet supply chain. So very excited about the story. Iluka are giving us certainty in terms of both revenue and offtake volumes and offtake commitments. That's the hardest part of the rare earths business for a junior to crack. How do you sell your material? In this case, we've done it. And now we're ready to go ahead with the financing, and we're ready to go ahead with production. We look forward to that production being recognised by the market and the value that can be created by that production being recognised by the market and giving our long-standing and long-term shareholders the result that they deserve for backing this company. Thank you very much for your time today, and I'm happy to take some questions.
Nick, thank you for the great presentation. And I know you've covered quite a fair bit of this off, but just to reiterate, I think I'll jump into it. So can you please provide an update on when the updated DFS is expected to be completed?
It's expected to be completed at the end of November or early December.
Wonderful. And so you've mentioned that the engineering and design is required for the Browns Range beneficiation plant. Can you explain what this entails?
So we've gone back to fresh design because obviously technology has changed. There are 10 what engineers call packages that we have to put out to the market to get an accurate pricing. And they range from the earthworks package, the roads package, the power package, and one of them is the process plant package, for example, and then the underground. Two most critical ones, process plant and underground, the rest are fairly standard. And what we do is we design the specifications we want for those standards. We give them to engineers then to quote what they think that would cost to build. For example, what's going to cost to build a process plant that'll process 100 million tonnes a year or thereabouts, 900 tonnes a year of material and go through these stages of concentration. We have done that, for example. We selected 2 engineering groups to parallel track and give us a final quote. And we are just in the process now of evaluating nearly all of those packages. Some of them are still coming in, but they're more minor, to assess which particular engineering group we will use and which particular tender we will use to price up in detail what we're doing. That process is more than 60% on the way through. Different packages are at different stages, but there's a lot of work going on in both making sure that the packages that are returned from the engineering firms give us the information we want and are to the standard we want, and that we then evaluate properly who we select to take the next step forward. So that's roughly the process we're going through now.
Thank you, Nick. Another one that you also have covered in the presentation. But so for the resource definition drilling, we mentioned that this is to commence in August 2023. I think one of the questions is just about when we can expect some results from that. You've
got to allow the better part of 5 to 6 months before there's any real results out of it. Those results won't be anything different to what you know. They're not going to enhance the mine substantially. They're going to confirm what we already know. So we don't think those results are in and of themselves really critical. We just think they're a very useful level of certainty that we would like to get to.
Thank you, Nick. So can you please provide an update on how the development plan for the Iluka offtake is progressing?
Well, it's done. We're all signed, ready to go. We have an obligation to deliver. They will agree our mine plan and delivery schedule. We don't have that finalised yet because that's part of the DFS, but they will agree that. And then our job will be to quietly go away and build our mine, produce the concentrate, put it on the back of a truck and send it to them.
Thank you. And so from an infrastructure standpoint, what else will need to be completed for the project?
Well, we're fortunate in that it doesn't require a lot of third-party or external infrastructure. We don't have railway lines to worry about. We don't have ports to worry about. We simply need to focus on the area. Think of a gold mine. It's more like a gold mine in the sense that we have a discrete area out in the Kimberley that we will build. We will need to put our power in, we'll need to put our water in, we'll need to put all the systems in, we'll need to build the camp, et cetera, leveraging off what we've got there already. But it'll be all within the contained area that we have. And then the trucks will go on public roads. There'll be small road construction to public road, and then from there it'll be public road. So there's not much dependency on outside infrastructure, which is a good thing.
Wonderful. Sorry, jumping around a bit here. So can you please describe the concentrate that will be trucked to the processing facility?
Well, the concentrate, I can describe it in detailed technical terms, but I don't think that's really necessary. The concentrate will effectively be about 250 kilos per. It'll be bagged in bulker bags for 1 ton. It'll be 20 to 40, 30 tons will be put, I don't know the exact number, forgive me, but I'm not across that logistic, but about 20 tons will be put in onto a truck. We'll do about 3 trucks every 2 days, and they will take that material to Iluka's yard. The bulker bags of 1 ton will have a contained assay of rare earth oxides of about 25%, so 250 kilos, thereabouts. And I say thereabouts because it'll vary a little bit between 22% and 27 or 8%, depending on where we are in the mine and so on. That material will be assayed when it gets to Iluka, and its REO oxide content for all REO elements, not just the ones we think are the most monetizable, DYTB, will be assessed, and we will be paid either 100% or a proportion, depending on what the market looks like, of all of those REO oxides. I should have added in the presentation, we're not paid 100% of the oxide value, clearly, because somebody's got to make money out of doing the next stage, the very heavy capital cost. Iluka is spending $1.5 billion to our $500 million. They need to make money on that. But ballpark concentrate, normal monazite concentrate, which is not us because we have xenotime, that special mineral, normal monazite concentrate probably trades between 25 and 30% of the final oxide price, as I understand it. And I think it's fair to say that we will get a reasonable premium on that. I can't give you the details of the exact premium, but it's significantly more than that as a percentage of the final oxide price. That'll all be calculated. We get paid a provisional amount, then Iluka sell, and then we adjust as you do in iron ore or any other mining industry. So I hope that helps understand the process of concentrate.
Thank you, Nick. Look, I think perhaps just to reiterate, so what should shareholders and investors be looking forward to over the next 3 to 6 months?
Us declaring, getting close to financing. The worst stage in any listed junior mining company is the pre-financing stage, because people say there's a mountain to climb and there's a certain amount of uncertainty. And in some ways, if we were just an exploration company, we'd probably be better liked by the market than having to develop. But we are far, far from an exploration company. We're a pre-development company ready to go. And I think what we want to be held accountable for by shareholders is our delivery of the project itself, because that's where the money will be made. So milestones towards DFS, milestones towards financing, they're the things that will really create value.
Wonderful. Well, Nick, I think that's covered most of the questions that have come through. I want to thank you all for your time for joining us today. If we have missed any of your questions, please feel free to reach out by the contact details, which can be found at the bottom of our ASX releases. And a copy of today's recording will be available online in the coming days. But thank you all again for your time.
Thanks, Jane. Thank you very much for hosting.